MTN SME Hub. Link to growth, link to success, link to the ultimate resource for business advice and insights.
Welcome back to the Big Small Business Show. And in studio with us today, we've got Andrew Ludwig. He's co-founder and CEO of Currency Hub. And we've just learned all about arbitrage and how to trade arbitrage. I actually think it's ingenious. Do you have competition in this space?
There is. There's some good competition out there, much of which has been flushed out due to FSCA regulation in December 2023.
Yeah.
And that's good. It's good for the industry.
Okay, so your question was around scale, but you said you've been scaling now, despite let's call it the threat, the sort of Damocles that's hanging over your head, right? So how have you been able to scale? Is it because you're just creating the returns that the market wants? And because of I'm going to ask the second question, I think, is because my risk is so over such a short period of time versus if somebody is going to buy and sell in a month's time or even a week's time, which can be eternity in the trading market. So why have you been able to scale?
So, Allon, this is one of the toughest businesses that I've ever participated in as an entrepreneur for 20 plus years. And you and I met 20 plus years ago. It's, as I said, it's akin to a dying technology. Arbitrage diminishes with time. In 2017, this thing was trending at 20% premium. As more entrants came into the market in 2019, it started to ebb between 8% and 5%. It goes down because more people are doing it because everyone else is scaling up. But when it got to 2.5%, it got very tricky for people who didn't have the infrastructure, the regulatory environment, the forex tools, the knowledge to trade a macro market.
And the volume.
And the volumes, importantly. But that comes with a requirement of client services. And the operational infrastructure and how we have enabled the IT and the plumbing and what speaks to banks and how we deal with SARS and how we deal with the SARB and all the bells and whistles that make this thing a very, very difficult business to run, still requires people. So going back 2 years ago, there were 6 of us. One of our biggest competitors had 45 people running the same business, pretty much with the same volume and flow. Nonetheless, in the last 18 months, we've scaled up to close to 30. So 20 new people in 18 months into a business that 3 years ago we thought might not even be around. We've taken a view. There's exchange control in South Africa. It'll probably be here for a long time. And we have proven that we can trade this arbitrage below a 1% premium. And that is the edge that we at Currency Hub have and have made a decision to scale up.
So you've got, I mentioned sort of Damocles burning platform, but what you're saying is that there is effectively one of the moats around competition is that you are able to run efficiently at that low margin because of technology and volume that you've built out and other the plumbings as you call it. I want to understand who your clients are, not by name, but generally are they institutions? Is it institutional? Is it private money? Where's your money coming from?
It comes from individual taxpayers in South Africa who are over the age of 18 with a South African ID book who are tax compliant. It doesn't come from any institution or business or anything else for that matter. If it did, the arbitrage would disappear. It exists because we use the individual's offshore allowance. We each have 11 million rand, SDA, single discretionary allowance, and then the AIT, which is your offshore allowance, formerly known as your foreign investment allowance. That is 10 million. And the sweet spot is at 10 million. That is 90% of our flow, and we have dedicated 90% of our resources to making sure we're very good at that. So getting tax clearance for our clients, who would typically trade with 100,000 Rand and above, would allow us to get 10 million Rand tax clearance over a year. And with that 100,000 Rand minimum, we should be eking out returns that average around 1.5% to 2% of the gross premium. What does that mean? At my example, 150,000 Rand profit from 10 million Rand traded over as many months as we need in the year.
Can you share how many individual clients you have?
Regrettably not.
You can't. I thought not. I thought I'd try. And how do you acquire these clients?
Also a tricky one. So pre-regulation, again, we're a financial services provider and have been since 2015. We had to be very careful how we were promoting this product because it was non-regulated in the eyes of the FSCA. So we sought to create a lot of video content. We sought to use a lot of PR. In terms of winning clients over, we have to win them over with trust. They have to understand who we are. So, we made ourselves very available to the media and uncomfortably so to some extent. And there's that much that we want people to understand that we are the good guys. We are the most regulated guys. We come from a hedge fund background. We know how to trade markets. A lot of the guys who popped up in the crypto arbitrage space were opportunists. They weren't regulated. They didn't understand the macro risks, money left offshore, using bad exchanges. So as crypto pioneers, we're not immune to mistakes that have been made out there, but they've been mistakes in our own sandbox. And that allows us to take those learnings into the trading environment that make it a lot more efficient. So clients typically are above the age of 18 who have an income and can show that they can trade with 100,000 Rand, and we will help them get their tax clearance thereafter.
Okay, so you spoke about my question is, why do your clients trust you? But to me, how fungible are your clients to move? Are they loyal? Are your clients loyal?
Yeah.
So they trust you, you've got competition, but how do they choose?
Yeah, Allon, it's a really good question. We've got good competition. We're good at some things and we're really bad at other things.
Okay.
We are really good at trading. And our zero loss track record demonstrates that we have outperformed our competitors by 20 to 30% year on end. With the focus on trading and risk management and being able to deliver the best risk-adjusted returns, we've been negligent in client services, for example. I use the example as one of our competitors had 45 employees when we had 6. And those 45 employees, most of whom were account managers, helping their clients understand where they were. So we've thrown a lot of money at technology to improve this. We've gone through the scaling pains that a new business goes through, and that's a great thing to be in, albeit sleepless nights and a bit of gray hair. But if I look at where our competitors go, we are not developers. We are asset managers. So becoming developers, scaling up a business in a diminishing environment, and trying to keep the ship from hitting the rocks, that's what's been hard work for us as a lean, albeit very mean team.
And we're going to have to leave it there. When we come back, I'm going to have some thoughts for Andrew. Stay tuned.
MTN SME Hub, link to business success.